All right, Discord live. Bob, Lalit, Mark, Michael. All right. Larissa, Hava, Alone, Bob, Ed, Ernest, Lalit, Mark, Michael, Patrick, Raymond, Bill. Thank you for participating. Welcome, YouTube subscribers. Thank you for joining. All right, I think we are ready to go. Welcome to Tradespoon and Yellowtail. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. For those of you on YouTube or Discord, if you're new, the difference between our services and some of the other services is that they're very heavily invested in technology, artificial intelligence, and we have neural networks that run every day. The algorithms run every day to find opportunities in the market, right? Trend analysis, support resistance, which stocks can outperform. And my background is technology and trading. I've been managing my own money for over 15 years. Disclosures are important. Yes, specific trades in my own personal account. So it's very important to understand the risk associated with trading stock or options. If you're new, I encourage you to visit this link, optionstrading.com, so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right. The goal is to become disciplined, confident trader that you can generate part-time, full-time income. The only way to do this is through repetition and process, right? The idea of the economy of control is that you have process versus outcome. In the beginning, we only care about the outcome. As you start learning about trading, process is less important. And then as you get more experience, you realize that process is more important. What does process mean to me? Keeping a journal. I encourage everybody to keep a journal. In your journal, document all of your trades, right? The reason why, ask yourself several times why you get into a trade. Try not to trade, there's a lot of biases, right? Self-serving bias, many other. We talked about game theory, we talked about prospect theory. So there are a lot of biases, risk aversion. So you always want to write that down, right? Are you influenced by risk aversion, right? That your downside is a lot more painful than the upside, right? So I would write that down in the journal, and then have a checklist before you enter a trade. Have a checklist. Most important is cash. I propose not to trade on margin. Always have at least 30% of your portfolio in cash, especially when you get paid 5% on money market funds. Portfolio drawdown. Look at number of positions and position size. Right. So if you need to trade in, I propose to keep your maximum exposure to the market no more than 10% of your account value. So that's 4 positions, 2.5% risk. Right. Then market can go up 10%, market can go down 10%, but you are not going to expose more than 10%. There's some other checklist. Wait for 2 to 3 days to confirm the trend change. Look for allow more time. If you're trading options now, we're close to May expiration, so maybe now is the time to close May position, roll into June, July. Allow more space, right? If you think 50-day moving average will hold, maybe look at 200-day moving average, right? Or look at the previous 2 weeks low, right, to find your stop level. All that means is that if you allow more space, that means you're buying less shares. Look for ABC pattern. Do not sell naked options, right? So let's review. Is deciding, where the 2.5% stop loss, right? Most people, especially when you trade, you don't even think about stop loss. And then once you do start trading, you're exposed to that prospect theory, right? Risk aversion. So in terms of day 1 above 200-day moving average, day 2, about 50-day moving average, day 3 above 50-day moving average, right? That's the red line. We retraced about more than 62%, right, from the lows to recent highs. So almost at all-time high. Slightly lower today, day 3. So 50-day moving average, I would say, is the most important support line right now. Right, as long as we're above 50-day moving average, bulls are in control. If we drop below 50-day moving average, well, then I would be concerned. A model shows that the trend has overhead resistance. We are trading at 515. Let's zoom out to 1 hour. So yeah, I mean the gap, right? So if you're day trading, then I would say 513. I think we're already below 516. So the next level is probably 513. 513. This would be the gap, right? Somewhere between these two lines, and that's 50-day moving average. That's the most important support for the bulls. If we break through this level, then you have the second gap to be closed, somewhere between 500 and 505, 502, right? That's your support number 2. So those are the other 5 points if you're doing day trading, and I would use 10 points if you're doing, medium-term trading for a few weeks, just 50 shares, right? So short-term trading, you're trading bigger position. The more position, then you're trading less shares, right? To keep that 2.5% exposure. So that's the most important. In terms of exposure, positioning. So this is the model, right? This is the traditional technical analysis. This is neural networks. And then this is, I think we were looking at this yesterday. May 7th, let's reload it. So now I'm looking at the open interest, right? How are people positioned, right? This is all nice and wonderful, what I think, but going back to game theory, it's important to see what, majority of the people think, right? So one way to express what, maybe not majority, but at least a lot of people thinking is looking at the open interest, right? That's where the supply meets the demand. All right. So in terms of supply meeting demand, today is May 8th, Wednesday, Thursday, Friday. So into Friday, a lot of positioning is at 520, right? So the first overhead resistance is 520. We said that. That's the, yesterday's, we almost got to 520. Then there's a lot more position, right? A lot more open interest at 525. So between now and Friday, and then CPI data on Tuesday, best case scenario, we're at 520 or 525, right? Those are your 2 overhead resistance. And support, the first level of support is 514, 512, right? And then much bigger position is at 510, right? So 50-day moving. So between now and CPI data, I don't think we're going to break below 510 based on the position, nor do I think we're going to break 520, 525 level, right? So at 510, maybe that's your buy signal, right? And 520 is 522 is where your sell signal is, right? Based on positioning and how people are positioned into Maytown. Into expiration, you can see biggest, very large position at 500, right? So Most likely, even if CPI data does come in worse than expected, harder than expected on Tuesday, and was at least until Friday, 500 should hold, right? And in terms of call selling, much, it's a lot less volume, right? Biggest demand is in the 500 put. So pretty well positioned. Any questions? Good morning, Faust, Kirill, good morning. Welcome. Thank you guys for joining. In terms of earnings, again, mixed bag. You have Uber down 8%, you have Toast up 4%, you have CP&G down 7%, Rivian down 7%, Twilio's down 5%, Occidental Petroleum down 2%. So it's a mixed bag, right? And you can see some of the indexes already kind of testing 50-day moving average. I was looking at home builders yesterday, so they're flirting with 50-day moving average. The home builder pulled back after some of the earnings and concerns that rates are higher and inflation eats into the profit of home builders, so they're trading near 50-day moving average. And I think ARC Innovation was also started to pull back significantly. You can see similar regional banks rolling over, jets, airlines rolling over. So small caps are pulling back, fighting for the 50-day moving average. So that's, I think, between now and Tuesday, that's the price action. Can the 50-day moving average be defended in some of these indexes? And also, I would keep an eye on interest rates. Interest rates did have dropped significantly, but short-term they're oversold, right? So if CPI comes in even slightly higher than expected, I think rates will get back to 4.7. So rates are oversold, but that's positive. That's the reason why market rallies. Still very high correlation between interest rates and equity market, and similar price action in dollar. Pull back to the 50-day moving average, and now rebounding. So this is the reason why market rallied, and this is the reason why market now is under pressure. QQQ down 0.5%, spiders down 30 basis points, small caps 1%, regional banks 1%, ARC Innovation 2%. All right. So usually I wait 15 minutes, right? So you can look at some of the signals, right? Some people are confused about the active trader and aggressive power trader, right? We have active trader on yellow tunnel. We have aggressive power trader on Tradespoon. These are trade ideas, right? This is not something I trade every day. Right? Sometimes I take some. In terms of earnings power trader, it looks like today muted reaction. You don't see two standard deviation moves. So I did lift, right? I did lift yesterday. And the lift is, I bought 19.5 call, and lift is far away from 19.5 call. Right? Obviously it could continue going further down, but for now, that's the price action. All right, so Uber, right? I would wait 15 minutes on Uber. Uber, pull back, right? I would keep an eye on Uber. You have CP&G also pulling back. And then after 15 minutes, you can make a decision, right? You're looking for some kind of a support versus resistance levels. Any questions? Let me see. Kirill, good morning. John, good morning. Lyft is up. Yeah, Chuck, yeah, Lyft is up 6%, sorry. Uber is down 8%, Lyft is up 6%. If I misspoke, I apologize. Affirm is up 6%, Twilio is down 6%, Rivian is down 8%. So Rivian is trading at $9. I did 8 put. Shopify, yeah, Shopify had earnings as well. I did not mention it. Let's look at Shopify. So Shopify is down 20%. So you can see kind of the theme that retail, consumers, e-commerce, small to mid-sized businesses, they're being affected, right? I mean, Twilio is down 6%, email marketing and other e-commerce services. Rivian, down 9%. Lyft, it's been overbought, so it makes sense. Let's see, Uber looks like rebounding. Let's look at Twilio. Twilio continues going lower. Bob wanted to do straddle. So for now, it's down. We need Twilio to continue going lower. Let's see, CPNG drifting lower. Let's look at CPNG. Toast continues to grind higher. It's 26. So it's 8:40. You have 10 minutes. Let's look at Rivian. So 8:41. Rivian is staying at 9:32. Right, so lift up 10%. Let's see. Close to 18 level. Let's see. So for now, no, not going anywhere. Seen level for a while. Earnings beat. Teva Pharmaceutical, thank you for sharing. All right, let's review other. So let's see where the market is. Nvidia down 0.5%, Google down 1%. Japan is down. Japan looks weak. It continues to grind lower. So pretty sharp pullback in Japan. And then just slightly down, small caps down 1%, regional 60 basis points, spiders slightly lower, QQQ down 40 basis points, and transportation also kind of rolling over. Retail is down 1%. Let's see, home builders slightly below. And China pulling back. Let's look at interest rates. Interest rates are still below 450, so they're below this breakdown level, which is good. All right, let's see other positions. All right, so I do have Rivian, also Rivian 8 put. So how much is 8 put trading at? For now, it's 2 cents. So it's trading at $9. So and it's still kind of 5% below. So for now, it's at 2 cents. So Rivian has to pull back further for that butterfly to start to work. And for now, Rivian is The session low, so it could continue going lower. You just have to wait and see. Talked about lift, same thing with lift. Lift is 19.5 call, which is also pretty far away. Lift is at 18 level. I mean, it has to move another 10%. I mean, we do have 3 more days, but for now, it's far away from the from the call strike. And then I did close Texas Instrument. That was yesterday. Okay. In terms of the rest of the positions, let's see. Amazon. I'm long Amazon, directional trade. Amazon is double top. It's at all-time high. It's pulling back today. It's above 50-day moving average, so time is on my side. So I'm long. I rolled from May to June. Disney, we talked about British Petroleum, that's the leftover. So gold and silver, let's talk about gold and silver. I think small percentage of your portfolio should be in gold and silver. It's kind of going through consolidation. It's at 50-day moving average, above 50-day moving average. I think this is a strong bullish price pattern. It's going through consolidation at some point. Assuming that inflation is not going anywhere. I mean, it could go up and down, but as long as it's still kind of higher than that wants it, I think gold is going to continue going higher. Or if it's debate of, a couple of weeks ago, the debate was, no landing. And now, if you read the news, the debate is, soft landing, 95 type of rally, versus some kind of a mild recession, right? So that conversation, as you can see it being reflected in some of the earnings. What else? So we talked about British Petroleum, we talked gold lift. Let's see what else we have. I have Merck and NVO. So let's talk about NVO. I had this position for a while. I'm still bullish. It's going through consolidation. But maybe just continue to trim. Let me see how much I have. Because it's fighting for the 50-day moving average. Earnings are already out. I mean, it needs some kind of a bullish catalyst. So it's either close the position and wait for a breakout above 136, or let me look at my position. I can continue trading around it. So I just want to see what my exposure is. Because it was as low as 121, 120. Pretty volatile. And it's facing 50 days. I mean, it's basically highly tied to S&P for now. And so maybe trim it further. Let me look at my trades and so I've been just selling it for the past months or so. The last time I bought was at 124. So I'm going to continue trimming. $127.74. So 127.83. So I still have maybe half of the remaining position left. And I do have an open order. Let me just make it more recent. Change it to, in case it does break out, I'll put it 137. So the remaining position closed at 137. Again, the reasoning is I think market is overbought and consolidating. I still think the risk is to the downside and is facing overhead resistance. So if it breaks above this level, I would say if it breaks above 136, then I would consider adding more. But for now, I think it's going to trade in the range between 132 and 120. Actually, let's see how it's positioned in NVO. So short term, yeah, 132. I mean, you do have 150s, people selling 150 in June contract, but May contract, large position is 132. So I don't think, so basically people think that we're not going to get above 132 between now and May expiration. So that would be my reasoning. Or you can buy General Electric, yes. Bob likes General Electric, I did close. Yeah, you can just buy General Electric and let it ride, I agree. Until a certain point. Bud Light up 5%. Yeah, Bud Light, I think, had earnings. All right. Anything else? Let's see. What else do I have that we need to go over? Oh, Merck. Merck actually, again, came on the model as a buy signal. It recovered 136. Let's see, Merck. I mean, it also overbought, right? It kind of needs to break above this level. Let's see. So I want to trim. I bought it at 131.52. I bought it at today's high, so maybe I'll change it half of the position right below 132. Change to 132, 131 point, so right below this number, 80. So trim half of the position at 131.80. I mean, it's struggling to break to the upside, so for now it's range bound. For now it's range bound, so I'm gonna try to exit half of the position and just make small gain, and then maybe add to it on the pullback. So that's Merck. Let's see what else. Merck, we talked about. I still have QQQ puts. It lost more than half of its value. So QQQ needs to get, it's a June contract, so the good news is I do have time. Not so good news is, it's a hedge, right? So as long as my bullish positions keep going, this is the, cost of hedging. It's sitting right at the 50-day moving average, but day 1, day 2, day 3, we'll see. I think it's going to be hard for the bears. Something has to happen in the market for bears, to push it below 50-day, below this breakdown level 433. So for now, bulls are in control. Talked about Rivian, Schwab. I closed half of the position. The second half, it did pull back yesterday, but it's still kind of a strong uptrend. So for now, I'm waiting. I'm long Schwab. We talked about silver. This put will expire probably worthless, most likely. And then you have XLE Energy. And XLE kind of been consolidating around 50-day moving average, trying to fight for it. Semiconductors turn positive, spiders almost flat, QQQ almost flat, so bulls are stepping in. We don't see a lot of downward pressure. Meanwhile, Lyft continues to grind higher. Let's see. Lyft continues to grind higher. See that butterfly is trading at 8 cents at the cost basis. So let's see if I can close it. So I spent 8 plus 6, 14 cents. Let's see if I can close it maybe for 20 cents. Or another choice is if I don't think it, I mean, I can close. So I do have a 19.5 call. So I do have 19.5 call. So one way to do it, I can close 19.5 call for 20 cents with the assumption that it's not going to get to 20.5, right? 20.5. There is a lot of positioning, right? There is, one of the reasons I chose Lyft is because there is just a lot of exuberance, right, at that 20 strike, right? So as you get closer to this 20 strike where there is such a high position, it could act as a magnet. It could act as a magnet. I mean, you have small position at 19, and we're approaching 19, and next one is 20, and dealers will have to hedge it. So you could have kind of a couple more moves to the upside in Lyft as well. CPNG got to 21. And Uber is at 66. All right, 9:02. Any questions? Any questions on Discord? Oh, Mark, Russell, Cherry Blossom, thank you for participating. Any other questions? All right. All right, let's review other positions or indexes. All right, so we talked about Uber. So materials are right above 50-day moving average. Home builders right at the 50-day moving average. Metals and miners above 50-day moving average. China, above 50 to 100-day moving average. A lot of people are bullish on China. Industrials are above 50-day moving average. You have dollar continues to rebound. TLT pulled back today. REITs pulling back today below 200-day moving average. Healthcare below 50-day moving average. Consumer discretionary below 50-day moving average. Retail below 50-day moving average. Transportation below 50-day moving average. Telecommunication has been weak. QQQ above 50-day moving average. Semiconductors above 50-day or at 50-day moving average. XLK slightly below 50-day moving average. Dow Jones is at 50-day moving average. Banks above 50-day moving average. ARC Innovation dipped below 200-day moving average. Regional banks above 50-day moving average. Jets Airline above 50-day moving average. Strong price action in utilities year-to-date high, maybe even more. Right, almost at 2023 high. I mean, the only explanation is the expectation that interest rates will drop for whatever reason. Whether it's soft landing or slight recession, lower interest rates should benefit utilities, and utilities have been outperforming this year. Germany, nice rebound, almost at year-to-date high. Small caps down 80 basis points. Biotech down 80 basis points. In Japan, right, this Bank of Japan intervened. Definitely has been weak. How's FXI is the same thing. So I guess intervention wasn't large enough, right? So you do have a pullback. There could be more of these interventions at bigger amounts, and that's kind of one risk factor in the market. NVIDIA above 50-day moving average, so it looks like Google and Amazon are pulling back. Let's see anything else pulling back. Let's look at Magnificent Seven. So copper pulling back, aluminum materials are pulling back together with China. Let's see. After press conference yesterday, new iPad, Apple is flirting with 200-day moving average, but it's still, slightly below the open price after the earnings, but it's been consolidating above 200-day moving average, so it's still pretty good price pattern. Google has rebounded, so that's good. Tesla has been weak. Looks like it closed that first gap. Now you have a second earnings gap. So you close the first gap, there's a second gap. Microsoft is weak, below 50-day moving average. So mega cap, probably. Except Amazon, maybe. Amazon, I would say, the strongest. It's at 52-week high. Apple is weak, still weak. Amazon and Google are strong. Right, they're close to all-time highs. So these are the winners, and Apple underperforming, Tesla is underperforming, Microsoft underperforming. Netflix actually closed the gap, close to 52-week highs. So Netflix is doing okay, but still had weak earnings, and then Meta, same thing, underperforming. JP Morgan is flirting with 50-day moving average. Morgan Stanley is up. Goldman Sachs is up. They're stronger. Airlines are weaker. How's the Bitcoin doing? Bitcoin down 1%. Crude oil is down 1%. So crude oil has been weak. It's below 50, below 200. So pretty sharp pullback in crude oil. And Bitcoin is still below 50-day moving average. It started to roll over. All right, 9:08. Any other questions? Cherry Blossom, Russell, L. Mark, any questions? Thank you for participating. I'll see you guys tomorrow morning. Thank you on Discord. All right, go to webinar. Any questions, guys? Arisa, Hava, Alon, Bob, Brent, Carol, Chuck, Claude, David, Ed, Ernest, Faust, Fred, Aisha, Han, Ian, John, Kirill, Elite, Luis, Mario, Martin, Maurice, Patrick, Raymond, Ted, Terry, Sidar, and Bill. All right, thank you, guys. Let's see. So calendar. Kashakari, actually, after I read it, he had both bullish and bearish remarks, so didn't move the market. So I assume these Fed chair, regional Fed chairs will not move the market outside of this range that we define. Consumer sentiment maybe continues to deteriorate. So I'm not sure if it's going to move the needle. So Tuesday, we have to wait for Tuesday next week, right? We have Tuesday, we have producer price index. Wednesday, we have VIX expiration, and Friday we have. I think that will set the tone, right? By end of next week, we'll know. Are we going to all-time highs, or are we retracing back to recent lows? So that's what I would keep an eye on. Let's see. What do we want to do with lift? Doesn't look like it's breaking out, so let's see. Can I still close that put call? Let's see. What is the call trading at? 19.5 call is trading at 11 cents now. Sell to close 1. Okay, so I'm inclined to sell the call. Let's see if I can get 20 cents. 18, 19.5, not about $1.5. It moved 50% the distance. Not sure if it's going to move another. So I'll try to close the 19.5 for 20 cents. and assuming that lift is not going to get to the next strike price, this would be one way to make it a profitable trade. So it's trading at 20 cents. So I spent 14 cents, right? And I'm going to try to close it for 20 cents. It was as high as 25. So if I close it for 20 cents, then the risk is that lift is going to continue going higher to 20 and a half, right? Which is probably less likely. So by end of the day, I'm going to try to close it and either break even. Well, we have to wait till Friday, but that's one way to do it, right? Close 19 and a half, and then do buy 21 and a half call. So let me see 21. How much is the? Because I don't want to be naked, right? So I do have to buy 21 and a half call. So at that point, I would have to buy 21 and a half call. Yeah, Reddit looks like at least last night they were flying. Yeah, now it closed the gap. So you have these big reversals. I think this is their first earnings. And looks like a big reversal to the downside. All right, any other questions? $9.13. Any other questions? Making too many mistakes, need to review basics. Yeah, I think journaling, like you gotta, slow down, your decision-making process. The one way to slow it down is rigorous, like detailed journaling, where you would put down, why you got into the trade, what your target gain, what your stop losses, and then grade yourself. Right, and then before each day, review successful trades, review unsuccessful trades, and see what went wrong. Right? Did you buy too many shares? Did your stop loss was too close? Is illiquid stock that's easily manipulated? There are these common mistakes that we all make. But the only way to catch that if you document, right, and you journal and you write down exactly what happens, right? And I put a lot of notes, something like that. Right. So that would be my proposal. those continuing to grow higher. All right, so Uber, Rivian. How's Rivian doing? Firm down 6%. That's Bob's favorite. Okay. All right, 918. Yeah, I mean, market is going to be choppy. Unfortunately, market is going to be choppy because of interest rate, right? There's no clear picture, right? And is it soft landing, no landing, you know, potential recession? You don't really know. And as long as interest rates are so volatile, you know, then, you know, market is going to be, you know, have these swings. All right. That's all I have for today. Thank you very much. Have a great day, and I will see you Wednesday. So closing bell, Scott will do the closing bell. Thank you on the YouTube. Please hit the like button, subscribe. Scott is going to do the closing bell today, and I will see you Thursday morning, tomorrow morning. Thank you very much. Ernest, Bob, thank you. Bill, Vansidar, Terry, Ted, Raymond, Patrick, Maurice, Martin, Maria, Louise, Lalit, Kirill, John, Ian, Han, Fred, Faust, Ernest, David, Chuck, Carol, Bob, Larissa, Viva, Alon, thank you, Ahava, thank you, and have a great day.